Good afternoon. It is Friday, February 9th, 5:30. Getting this video out a little late. I was watching these markets all day. And this Dow Jones Industrial Average came back from the dead today. This thing was down, I don't know how many, 500, 600 points. And in the last half an hour of trading, this thing just shot up, ended up 300 points on the day. So now everybody is saying, all right, is this the bottom? Was this the bottom? We retested the lows. It's a tradable bottom. I don't think this thing is over by a long shot. I really don't. First of all, it's too late to sell, and it's too early to buy. All right? But what I want to focus on, the $64,000 question this week. Okay, that I've been hearing over and over and over. Why hasn't gold rallied? Why hasn't gold done what it's supposed to do? Right? People have been texting me. Somebody sent me an email with a link to some video, which I actually looked at. And I want to talk about that. Why isn't gold doing what it's supposed to do? And I want to try to get into that. So I want to start with this CNBC. This guy, Scott Nations, okay? This really smug, the smug, arrogant one, okay? He hates gold, this guy. And he's on CNBC. And he's being interviewed by this Jackie DeAngelis, right? Why Safe Haven Gold has not seen a win from this market sell-off. Stocks are continuing to sell off, but safe haven assets like gold are not catching a bid. And I said yesterday, where is the money going? It doesn't look like it's going into the dollar. It's not going into bonds. It's not going to commodities, right? Where is it going? Is it just sitting in cash? Are these people waiting to get back into stocks when they think this is the bottom? I don't know. Stocks are continuing to sell off, but safe haven assets like gold are not catching a bid. So she brings on this Michael Dudas. Let's bring in Michael Dudas, Vertical Research, right? We're watching gold up about $6.20. That was the other day, excuse me. But it's curious. In the past, you've seen these drastic moves in gold when people are concerned about the stock market. Why not this time? And he goes on. He gives a kind of a reasonable answer. Gold traded very strong after the rate hike in December up until about, the January 1350, 1355 level. Inflation will rise. Fed will be behind the curve. We have a 1400 year-end target. Okay. Now this Scott Nations comes along and he joins. He says, if you've been, this is not a transfer. I had to watch the video and I had to write it down. So I'm not quoting verbatim here. Okay. I didn't get I'm not going to write down every word. I didn't with this one. But he says, if you've been on before, you know that I hate gold. It's one of the stupidest investments since the creation of Bitcoin. Is this guy stupid? I mean, is this guy really... what is he talking about? It's one of the stupidest investments since the creation of Bitcoin? This is ridiculous. What a jerk. That said, even I expected it to catch a bid. A much bigger bid than it had given the volatility. You say that you expect it to go higher. He's talking to this guy, Mike, from here. But if it hasn't already, what's the catalyst for it to go higher still? And this is what everybody's talking about. Why isn't gold catching a bid? And this guy Mike responds, first of all, give it a little bit more time. Okay? And I think he's right. We need to give this a little bit more time. Now, I've always said patience and hope is not an investment strategy. Okay? I'm not here pumping up gold like the other carnival barkers and P.T. Barnums that are out there. Okay, gold's going to 5,000. Gold's going to 5,000 in the long term. No, you don't get that here, right? Oh, just got to be patient. No, patience and hope is not an investment strategy. But in this case, I do think we have to give gold a little bit more time. All right? And there's good reasons for that. We've just come off a tumultuous 4 days in the equity markets, and everything has been rebased. Okay? Copper is down, he says. Oil is down. The whole commodity complex is basically down, and gold is part of that commodity complex. Okay? As we look forward, I think people are going to look at gold. No one's paying attention to it right now. So now this guy, Scott, says, as a trader, we often would fade a move when a market does not do what we would have expected it to do. And we expected gold to be dramatically higher than what we have seen. Now, I don't know why he expects it to be dramatically higher, okay? Because he's under this false impression that if stocks go down, that means gold has to go up. And that's nonsense, okay? I'm telling you right now, it's nonsense. And a lot of people are under this, they have this illusion and delusion that this is stocks up, gold down, or stocks down, gold up. No, no. They both can go up together. They both can go down together. It's a risk on, risk off. We would have expected gold to be dramatically higher than what we have seen. Why would people be waiting to have the equity market settle before buying gold? Why would people be waiting to have the equity market settle before buying gold? Right? And then this guy Mike responds, the gold moves over the last few years. They've been muted. There's been margin calls now. As things settle down, more volatility, gold going to get a bid, basically, he says. Then this other guy chimes in, this guy Chris, right? He says, I look at the dollar, and he looks at this COT report, these hedge funds report, and I didn't get a chance to look at this report, okay, the Commitment of Traders report, right? Last week they started selling, they're reducing their longs. You know, you got the specs, okay? You got the institutions, right? So we have to look at this, okay? Scott says he'd be a seller to 12.50. Chris says he was long at 13.40, but he bailed out, okay? Now, to me, I think they're both wrong. I think they're both wrong with their trades, and I think they're both wrong with their thesis, all right? We need to give gold a little bit more time. Two things I'm going to say. In 08, there's margin calls, right? You get a margin call, you gotta cover, right? You sell whatever you can. Gold being like the most liquid asset there is, right? You sell gold to cover your margin call. So gold will initially go down. That's number one, okay? Number two, people might be selling gold, okay, to raise liquidity, to be ready to reload when they think it's time to get back into stocks, okay? So they're liquidating, all right? Perfectly reasonable thesis to have, okay? They're not just automatically stocks going down, let me run into gold. No. They got to use gold to raise liquidity. So I think, frankly, I think gold has behaved admirably this last week. To be honest, it was already due for a pullback, all right? Since the run-up from December, right? It's still above the moving averages, okay? It hit that low 1,300 level and has come back up off it, okay? So I don't have a problem with gold right now. I really don't. So what I wanted to get into is this 2008. Because history repeats itself. Okay? 2007. And I'll say this. This stock market that we have right now, and that's another thing. I got a call today. Oh, is it a good time to get in? I said, no. Things like this don't end in a week. This thing could take months. I said, unless it crashes sooner. All right? The 2007. Because they're going to keep telling you, it's just like 2008, right? One after the next, one after the next. All the skeletons come out of the closet, right? They all come out, right? A little at a time, right? They know where the bodies are buried. And they come out a little at a time. 2007. I'm not going to get that. This is too important. The Dow opened the year at 12,459. Excuse me for the telephone. And it rose despite growing concerns about a housing market slowdown. It rose despite growing concerns about a housing market slowdown. On November 17th, 2006, the Commerce Department warned that October's new home permits were 28% lower than the year before. Okay? It goes all the way through the year. It seemed the U.S. economy could shrug off a housing downturn and banks' liquidity constraints. The Dow ended the year just slightly off its October high of 13,264. Okay, just slightly off the October high. 2008 rolls around. At the end of January, the BEE revised its fourth quarter GDP down. Okay, it said growth was only 0.6%. The economy lost 17,000 jobs. The Dow shrugged off the news and hovered between 12,000 and 13,000 until March. This is March of 2008. On March 17th, the Federal Reserve intervened to save the failing investment bank Bear Stearns, the first casualty of the subprime mortgage crisis. The Dow dropped to an intraday low of 11,650, but seemed to recover. In fact, many thought the Bear Stearns rescue would relieve investors. They expected the intervention would avoid a bear market. By May, the Dow rose above 13,000. It seemed the worst was over. This is 2008. The storm is right ahead of them, and the Dow Jones is still going higher. Right? It's basically right there. It's going to repeat itself. In July of 2008, the subprime mortgage crisis threatened government-sponsored agencies Fannie Mae and Freddie Mac. Do you remember that? They required a government bailout. Okay? The Treasury guaranteed $25 billion of their loans, bought shares of Fannie and Freddie Mac, right? The FHA guaranteed $300 billion in new loans. The Dow fell, closing at 10,962 on July 15th. It rebounded and remained above 11,000 the rest of the summer. So what I saw today in this Dow, this shocking rebound, I don't care. I don't care. Because this thing, and I'm on record, you also know that I'm out of stocks. That I said it on this video. I sold a little more, and then I sold, and I'm out of stocks, and I've been out. How long has it been now? 6, 7 weeks, whatever it's been, right? I'm out. I got out. What did I say? I don't need the last 20% of this rally. I'm on record as saying that. This thing is going down. It remained above 11,000 the rest of the summer. Now we get into the fall. And let's keep in mind, we're only in February here. We got a long year ahead of us. Now it's the fall, September 08. The month started with chilling news. On Monday, September 15, 2008, Lehman Brothers declared bankruptcy. The Dow dropped 504 points. On Tuesday, September 16th, the Fed announced it was bailing out insurance giant AIG. It made the $85 billion loan in return for 79.9% equity. AIG had run out of cash, right? On Wednesday, September 17th, money market funds lost $144 billion, right? Most of the businesses parked their money in overnight cash. Companies panicked, switching to Treasury notes. They did this because LIBOR rates were high, right? The Dow fell 449 points. This is mid-September 08. On Thursday, September 18th, markets rebounded 400 points. This is how bear markets happen. What I see right here is a classic slope of hope. It's already starting as far as I'm concerned. I witnessed it in gold for 6 years. It goes down, it goes back up a little. People get all hopeful, right? It goes down more, it goes back up. It was a classic slope of hope with gold. And I have yet, to this day, I have yet to call a bull market in gold because it has not taken out and held my key level, which is 1340, which I said was going to be a battle, and it turned out it was. All right? Markets rebound. Investors learned about the new bank bailout. On Friday, September 19th, the Dow ended the week at 11,388. It's still above 11,000. It was only slightly below its Monday open of 11,416. Okay? Now, on September 20th, Saturday, September 20th, Hank Paulson and Ben Bernanke sent the bank bailout bill to Congress. The Dow bounced around 11,000 until September 29th, when the Senate voted against the bailout bill. The Dow fell 777 points, the most in any single day in history. Global markets panicked, right? Then we get into October of 2008, all right? I'll get to the chase here because I want to get to where I'm going here. October 2008, right? On Monday, October 6th, the Dow dropped 800 points, closing below 10,000 for the first time since 2004. But it took all the way to October 6th of 2008. They went the whole year, right? The Fed tried to prop it up, okay? We get into more, but here's right. The Dow responded by plummeting 13% throughout the month. By the end of October, the BEA released more sobering news. The economy had contracted by 0.3%. Okay, so it went down 13% in October. November 2008, the month began with more bad news. The Labor Department, right, reported that the economy had lost a staggering 240,000 jobs, right? The Dow, on November 20th, the Dow had plummeted to 7,552, a new low. November 20th. It took practically the whole year to get to that low. I don't think we're anywhere near close to this low. It's only February. But the stock market crash of 2008 was not over yet. December of 2008, the Fed dropped the Fed funds rate to 0, its lowest in history. The Dow ended the year at a sickening 8,769, down almost 34% for the year. Now we get into 2009. In a burst of optimism, the Dow climbed to 9,034 on January 2nd, 2009. Investors believed the new Obama administration could tackle the recession with his team of economic advisors. But the bad economic news continued. The Dow plummeted to its bottom at 6,594 on March 5th, 2009. March 5th of 2009, the Dow put in its bottom. This is a long process, people. Okay? And you got these shills and cheerleaders on CNBC after basically 1 week calling bottoms. All right? So from all of the rumblings starting in 2007, the stock market is gyrating throughout 2008, and it doesn't bottom until March of 2009. You're looking at 15 months, basically. Let's call it all of 2008 and 9. 15 months, right? Now, and here's a picture from peak to trough, right? That's household net worth, 65 trillion peak, goes all the way down to the first quarter of 2009, all right? Now, what did gold do? What did gold do in these initial months? This September, October, November, December of 08. What did it do? Well, it didn't go up. It didn't go up. This is 08. This chart right here. This is gold 08. Right? There's September. September 8th of September of 08. It went up. It came back down. And it ended the year not at the highs. So it really didn't do much in the fall of 08. Now, this is 09. Started the year down. Then it went up. Kind of leveled off. Okay? And it wasn't until May of 09, May of 09, right there, where it really started to take off. That was past the March bottom. Gold, look at the chart right there. Look at the chart. It did nothing. It didn't go anywhere. This is all of 08. The high for 08 was all the way back in March. The March, April, late, mid-March period. Basically right at that 1,000 level. It closed the year short of 900. So September, October, and November and December, there was nothing. There was no correlation there. In 2009, it goes all the way back down to about 800, goes back to 1,000, okay, kind of consolidates, and then it didn't take off until May. May and June is when it really started to pick up, okay? And then these are the monthly charts for September, October, November, and December. September goes up, right? October goes down. November goes up a little. December, basically right back where it pretty much started from. This seems long and it seems kind of in the weeds, but I am saying, and I am almost certain, gold's not going to really start to react, okay, until they figure out how they think they're going to solve this problem. And that's when they have to decide they're going to have to let the dollar go. They're going to have to let it go. And as these yields continue to rise, as bonds fail, okay, that's when I think gold is going to shine. Not now. I don't think it's going to shine now. They're raising liquidity, okay? They still have way too much confidence in this stock market. They're not scared enough, okay? So I think it would be a shame to bail out now. This guy, Chris, he bailed out, right? This guy, Scott Nations, he would be a seller. I think they're going to be wrong at the end of the day. I really do. So that's about it, people. They're not scared enough. Here's the VIX. The VIX is down another 13% today. Look at that. It's nowhere near fear. We're not even close. The dollar is getting a little bit of a bid, okay? But it's not at its 50-day moving average yet, all right? Which is down. The 50-day is down. The 100-day is down. The 200-day is down. I think we'll see if it could touch that 50 and then start to go down again. So that's about it, people. The bond yield, the 10-year is still 2.85. The 30-year has hit 3.16. These yields are rising, okay? And what's to say they're going to stop? Why? Tell me why they have to stop. Oil is under 60. Oil didn't catch a bid. Copper is back down to 3.04. That didn't catch a bid. The cryptos are up again for the second day, all right? But I think gold is doing what it's supposed to do. I think it's doing exactly what it's supposed to do. In a time of crisis like this, you turn to gold for liquidity, okay? So it's doing it. So in contrast to this Scott Nations character who thinks it's the stupidest investment, which the creation of Bitcoins, this jerk, okay? I think it's behaving exactly what it's supposed to be doing. I'm sure it's bailed out a lot of stock people, Mr. Scott Nations, okay, that got these margin calls. So that's about it, people. It's been a long, interesting week. I hope you enjoy your weekend. Get out, enjoy it, keep things in perspective. And it'll be interesting next week. Very interesting week we're going to walk into. And Lord willing, we pick it up on Monday. Ciao.